Happy Monday. Yep, it's Monday again. Welcome to another Profit Maximizer moment, another Smart Profit Maximizer moment. Monday, I got to be retrained. My name is Wayne Belisle. I'm the Smart Profit Maximizer coach. Let me adjust this down a little bit. There we go. Love live video because you can't do a retake, which I would do almost every time I did a normal video. So you guys are stuck with the first couple of seconds. It is Monday, like I said. It's already, believe it or not, the end of January. Today is the 28th, which is the first day the IRS will let you file tax returns electronically. All right, they really weren't available before then. So I wanted to take a few minutes. Like I said, let me introduce myself first. My name is Wayne Belisle. I'm a CPA. Been doing tax returns and coaching small business clients and helping them pay less taxes, but coaching them make more money since I started working in the 70s. So I've been doing this a long time. All this gray hair, I earned it. Okay. I wanted to talk today about the new tax law because a lot of confusion's out there. And I've kind of written down the that's all I wanted to do today was go through the questions that I've been receiving. Okay. I think I'm coming down with a cold. Let's hope not. Don't have time. All right. So the first thing that I hear a lot is the Obamacare penalty for not having health insurance gone? Yes, but not till 2019. So that means if you didn't have insurance in 2018, you're going to get hit with the penalty. Another problem that comes up is people get confused. If you sign up for Obamacare, excuse me guys, if you sign up for Obamacare, and you have to tell them what income you get. And based on that income, they basically tell you how much assistance they're going to give you. All right? So you're guessing. So if you tell them too low, when I do your tax return or whenever somebody does your tax return, you're going to get hit with a penalty to repay that assistance because your income was too low. And that's a serious problem when you're self-employed because your income can up and down a lot. And that's one of the reasons if you're doing Obamacare, you really need to stay on top of, even after 18, you're going to need to stay on top of your income to make sure that you're not going to have to pay that back. Another question I got was, I have a part-time business along with a full-time job. Can I claim the new 20% business deduction? Yes, assuming one of the many limitations doesn't apply, all right? The deduction applies to any taxpayer who is sole proprietor, has a partnership, or has an S Corp, all right? K1 from one of those. This really is one of the more complicated parts of the new law. It may be one of the more complicated parts of any law I've seen in a long time. I'm required to do CPE. When I do the tax area, I've been doing it so long, if it says it's going to take 8 hours, it usually takes me 3 or 4 at most. Okay. This one, a 4-hour course, took me close to 12 to learn the intricacies of how this thing worked and really understand it. Another question I get, can I deduct interest on a home equity loan used to remodel my home? The answer is still yes. A loan secured by your main home or your second home that is used to improve either property is still deductible as acquisition and indebtedness. 2018 and after, if you take out a loan and pay off some credit cards, that's not going to be deductible anymore. This does not apply to rental properties. If you own rental properties, you still get to deduct them, okay? Is it true that home mortgages are now limited under the new law? Yes, okay. But it will affect few people. The interest can only be deducted for loans up to $750,000. I don't know why I went that way. I mean, don't I? Of acquisition interest. This is down from $1 million, okay? In our area, it doesn't apply to many people, but it will, okay? Does the new law limit my interest deduction on rental properties? No. Rental properties are still 100% deductible. Remember passive loss limitations, though. So this has been around since '86, so this isn't anything new. If you only they're considered passive most of the time. Another question that came up I didn't have written here, but because it just came out last week, okay, was can rental property get the 20% deduction? Well, yes, if you can call it a trade or business. And now it's like they lowered that to if you do 250 hours on the rental property, you can take the 20% deduction. Better document that, better keep timesheets of that, and it gets a little more complicated than that. So if you have rental properties like that and you're thinking about being able to take 20% of your income, this is 20% of your net, not your gross. So if your properties are not making a profit after depreciation, taxes, and things like that, you don't have to worry about that. But if you have properties that are making profit after that, you really need to see an accountant or CPA to have somebody look at that. Did the new law change the home exclusion? The old rule has stayed the same. All right. If you lived in the house, your personal house or your second home, But really, it's going to be your personal house because it's got to be your main residence for 2 out of the last 5 years. If you did, then you can sell it, and up to $500,000 of the gain married, $250,000 not married, single or head of household, is excluded, which in El Paso means just about everything. Did the new law end like-kind exchanges? Kind of. Not all, okay? The new law eliminated all like-kind exchanges except for real estate exchanges starting in 2018. This is a major change for business owners. If you trade in a piece of equipment, and business owners do this all the time, they take a truck, they fully depreciate it, they trade it in. Now you're going to have to treat that as 2 transactions. All right, if you get $20,000 for your car that you traded in, and I took a full depreciation, you have a $20,000 gain. On the flip side, if you replaced it with a vehicle that can still be depreciable 100%, like a pickup truck or a van or something like that, no big deal. But if you had a pickup truck that you got a $20,000 gain and you exchanged it for a car, and the net's going to be that you're going to have some taxable income. So before you do that, this is a change. So before you do something like that, make sure you call your CPA, your tax person, okay? Was the credit for installing solar panels eliminated? I get that a lot. I'm sorry about that, guys. No, you can still claim a credit for 30% of the total cost for 18 and 19, okay? In 20, that goes down, it drops to 26%. And 2021, it drops to 22%. After that, it's gone, okay? So can I write off a personal casualty loss? No, unless it occurred in a presidentially declared disaster area. So if your car is totaled in a wreck or your home is destroyed in a fire, you're not going to be able to get that deduction anymore. So great time to double check your home insurance or your car insurance to make sure you're covered. Did the law make any changes to the dependent care credit? Nope. If you're paying for the care of a child under the age of 13 so that you or your spouse can work or go back to school, those expenses, or look for work even, those expenses still qualify for the dependent care credit. Can I still deduct medical expenses? Yes, for 2018, that lowered to 7.5%. It'll go back up to 10% for 2019. What I mean by that is your income, let's say you make $100,000. Right now, your medical expenses have to be more than 7.5% of $100,000. That's $7,500. I just picked it for the math. It's easy. Next year, well, this year in 2019, but when you do your return in 2020, that amount will have to be over $10,000 instead of $7,500. Can I deduct my employee business-related expense? No. All miscellaneous deductions are gone. The IRS has been trying to do this since the late 70s. I remember hearing a speech from the Treasury Secretary at that time, the IRS. No, it was the Treasury Secretary, saying one of the main areas that there's fraud for the average person is in these miscellaneous expenses, and they've been pecking away at them forever. They finally eliminate them, all right? These include unreimbursed employee business expenses. This is a big one. It's really, I did, a few, 400 or 500 returns, and we ran a what if on the new law and the old law, and it was 4 people that basically were going to pay more than under the new law than the old law, and all of them were outside salespeople. Okay. If you use your car a lot for the business, for your employer, okay, outside salespeople, if they're not, if we can't call them, my statutory employees, my brain went away for a minute, you're not going to be able to deduct it. So if you have a lot of expenses, then you really should have by now gone to your employer and try to work out a deal where they deduct it. You turn in an expense sheet, they pay you, and maybe reduce your wages some. Otherwise, you're going to owe, and in the past you might not have. What about my other investment expenses? Management and IRA custodial fees are no longer deductible. All of that garbage is gone. Sorry, just making your life a lot easier. Were there any changes to charitable donations? Yes, the write-off was preserved, and you now can deduct up to 60% of your adjusted gross income, up from 50%. In English, if you made a $100,000 income, before you could only take a $50,000 deduction, now you can take a $60,000 deduction. I almost never see that unless somebody's donating property of some sort. If you do that, you better go get help. There's other laws for that. There's another change too. The law eliminated the deduction for gifts to college in exchange for the right to buy choice seats at sporting events. So, I know UTEP used to do that. They still do. If you wanted season tickets, you had to make a donation. That's no longer a deduction. Now, you can still make the deduction. It just means it can't be tied to anything. Are itemized expenses still phased out for high income earners? No, the phase out of the itemized deduction was eliminated under the new law. What is my tax rate for my C corporation if my income is less than $50,000? Yeah, that's a good question. 21%. It used to be 15 for the first 50. It's a flat 21% across the board now. So if you're not making a lot of income, you're going to pay a little bit more. You know, that's just to simplify it is what they were trying to do. This is the main questions I'm getting. This was one of the major tax changes since 1986. All right, we haven't had anything like this in that long. So if you have, on the one side, if you have a simple return, it got easier. All right. If you have a complicated return, you have real estate, you have business, it just got a lot harder. Okay. So for now, you know, I'd say if you got a complicated return, might not want to use TurboTax this year at least, you know, or at least get, you know, I have kind of a deal with people. If they do their return on TurboTax, I'll review it for them. And if I don't see anything that changes, I won't charge them. You know, business returns, I've had that bet for a long time. I've not done one free. Rentals, yeah, sometimes once they get their act together. Usually go to somebody in the first year you set up a rental, you can pretty much follow it after that, okay? If you have any questions, comments, anything like that, shoot me an email, comment, you know, leave a comment here, even on a replay. I'll catch it, all right? I'm going to spend a few times, I'm going to come in and talk about tax law because that's what we do. But most of these are going to be about increasing profits, and we'll go back to that tomorrow. So until later, this is Wayne Belial saying let's make this our most profitable year ever, and let's keep our tax liability as low as possible. Thank you very much.